Starting, we are recording our webinar, and I'm going to share our PowerPoint. I hope most of you were attending the other day, and I'm sorry that I was a little bit late for the webinar because of some technical issues. But yeah, if ever you have any questions, I've posted the PowerPoint on our platform. So if you have any questions that you want me to address, you should feel free after I've presented or before I can probably start presenting. For those who have gone through, if you have any questions now, probably you can just ask so that we then continue by addressing them as well as continue with our webinar. Any questions? What section is covered? Okay, our question is what section is covered in assignment 1? So with our assignment 1, we are basically covering from chapter 1 up to about chapter 6, the one that is got journal entries, yeah. So we'll do up to chapter 6, 5, 6, somewhere there. That's where we will that's what we will cover. And also, I hope you have gone onto the platform on the forum. We have posted, I've seen the facilitator has posted some notes on the cash book and as well as on the ledger, just to give some notes, but it's the same normal stuff that we know about cash books. Okay. So I'll proceed and then I'll share my PowerPoint. I'll just brush through it, what we've covered last week, and then we proceed to do an example which will more of like address what you'll be doing in your assignment 1. Thank you. Hopefully you can see my screen. This is the presentation. Our course is called Accounts Management course, and our intake is for 2023. This is our second intake that we are doing, and this is our more of like our first webinar. Okay, and for those who are not here, I've introduced myself. I'm Faustina Kaserera. I'm your facilitator. I'm helping you with presenting the webinars and also an example or two, so that when you attend to your assignments, then you are kind of like informed. Okay, for any questions that you might be having, you can ask questions on the forum. So why we utilize the forum is that we just want it to be for the benefit of other students, so that if you ask, then when others go through, they also get answered. And then for any admin and technical issues, if ever you cannot log in on the platform, or you are failing to submit your assignment, or you are sick, or you have other personal matters and you are not able to submit your assignment on time, you can contact Grace Mukuru on eLeader at LSSA. I think you do have that email address which you were communicating with when you were registering. Okay, pertaining to our course, we have gone through the platform. I have shown you how the platform is structured. I have shown you where the calendar is on the platform. So it's on your left side, if you can check, then there is what is written calendar. So on the calendar, it should be able to see when are the assignments opening, when are they due, and also you are able to see when the facilitator is online. Okay, so if ever you've got any queries, you have to post your queries on the forum. Then we are able to respond. You find the forum, what it does, it sends emails to the facilitators, and then the facilitators are able to respond. And also on announcement, we've got a tab for announcements. So if we've got any announcement, we post there, and we always try and strive that they are delivered to your emails. So you need to also check your emails for any communication. Sometimes we clarify, you'll find if ever there is an issue where other students feel a question is vague or the manual is vague, then we post it there. And then our manual, I've shown you where you download your manual on the introduction. On the material, you'll see, if you scroll down, you'll be able to download the manual. We make use of the manual in our course. So you need to go through it so that you get equipped and you know what is happening. And besides the manual, we've got the Legal Practice Act. So the Act has got certain sections, especially Section 86. It has got a lot of accounting. It has got a lot of accounting information there, what you need to do, what you need to follow. So you need to go to the Act, Section 86, and check it, read it, understand it, because this is what the Legal Practice Councils, and even in court, this is what they use against you guys if ever you are not adhering to the sections of the Act. And also there are rules that were published to do with accounting. Okay, besides accounting and other sections as well, they guide you on how to run your practices, how to manage your practices, and the composition, I think, of your partners, your directors, and the way that you form your names and how you should conduct your offices. So you need to download the rules, and then they have certain sections that also deal with accounting. So they are so clear. Where you do not understand, then you can always ask, and then we discuss. Okay, and then our course is structured in such a way that we have a test. So we've got test one. Test one is a multiple choice question test. So it has got questions that you answer on the web. So the way that it is structured is that you are given 3 weeks. It's open for about 3 weeks, 2 to 3 weeks. I think it's there. If you can check on the calendar, the dates are there. So once it is open, you are given an hour to attempt it. So if you cover your assignment 1 and finish, you'll be able to attend to your test 1. Okay, and then so it's more of like theory based, a very theory, and a few like accounting principles where say they want to just test if you know how to balance a cash book if you are given certain transactions. So yeah, it's manageable, it's doable. You just need to have an hour where you attempt it. And then our assignments, we've got 3 assignments that contribute 80% of the final mark. So test 1 contributes 20, assignments contribute 80%. So on this 80%, you need to make sure that at least, because we consider all the 3 assignments, we do not look at the ones that you have performed well. So we just add them up and say assignment 1, 2, 3, 4 marks divided by 300 multiplied by 80%. Then we get the percentage there. So we average them. So do not get swayed and say I can answer 1 or 2. Then they would consider that 1 or 2. We want you to attempt so that you can get practical experience. You can benefit from the course. So because of these assignments, you find assignment 1 is opened for a shorter period because it's not very difficult. We've limited it to you attending to cash books. So it's an easy assignment. And then assignment 2 is quite thorough and comprehensive because it introduces some topics which cover your industry, like conveyancing, like your section 86.4 investment accounts. So, and also VAT. So we need to account for those transactions, and you find it can become involving. So you need to plan your time, be active on the forum, and then you need to ask where you have got any queries. Okay, I've discussed our assignments. Assignment 1, it's mainly from chapters 1 to 7. Sorry, I said 1 to 6, but it's more of like 1 to 7 because it covers reconciliations and as well as I think a bit of journal entries. Okay, and then assignment 2, chapters 8 to 13. So assignment 2 is the one that more of like covers everything. It's a bit tough, so we've opened it for a longer period so that you can have time to attempt it and work on it. But what we do on these webinars, we also come with questions which are similar to assignment 2, where we then present. Assignment 3 covers all chapters. It's just to wrap up and make sure that you are now good in accounting, you are good in bookkeeping. Okay, and then the introduction, I've told you that's where you get your manual. So make sure you get your manual there and you get a bit of an introduction to the trust and business accounts, and you are taught the differences on that. And also the basic control principles. These pertain to the rules and also sections of the Act, and also the other statutory requirements. I think we've discussed this thoroughly last week, but for those who feel like they need to know a bit, we can always explain after the webinar so that others, those who want to leave early, they can leave early. Introduction to bookkeeping. So in our manual, we've got an introduction to bookkeeping, so you need to read it, and then you need to more of like grasp what is the difference between bookkeeping and accounting, why bookkeeping is important, and also the principle of debits and credits. So whatever that we'll be doing, we deal with debits and credits. So you really need to understand how to debit, how to credit, and why something is having a debit balance and another one is having a credit balance. So those are the principles of accounting, and we call it double entry. So if you can master the double entry system, then you are good at posting any transaction that you are given, because that is what we see, the basics. You start by thinking what is the double entry of a given transaction. Then once you can write it down, you'll be able to go to the various accounts and post. Okay, and then from there, we've got the accounting cycle, and then we've got financial periods or financial years, and also the issues of trust audits. Okay, I'll move and explain the accounting system. It's more of like, you know, when you look at accounting, the reasons that we account is that we have to account for transactions that occur in the firm, so that at the end of the day, we are able to tell if we are making a profit, if we have debtors that are supposed to pay, if we've got creditors that the firm is supposed to pay or the practice is supposed to pay, if we've got any tax obligations, or if the cash flow is sufficient to take us further into the future. So what we start with, we always start with our source documents. So source documents, they are very crucial, they are very important. When you receive your invoices, your receipts, your slips, you need to file them. Like your fuel, invoices, you need to keep them. Your advocates' invoices, you need to keep everything, because these source documents, you find they have to be kept for years, I think about 5 to 7 years. Because anytime, like in your case, you have to account to the LPC, you have to account even to court, you have to account to SARS. So sometimes they will say to you, we want supporting documents. So our source documents are basically our supporting documents. And then from our source documents, that's where then we post. So included in source documents, we've got bank statements, we've got receipt books, we've got we used to have checkbooks, but checks were they've been done away with, so we do not have checks anymore. Okay, and then we've got what we call books of prime entry. Books of prime entry, these are the ones that are used to record from the source documents. So from there, we've got our cash book. Like when it comes to our bank transactions, they are recorded through a cash book. And then when it comes to our fees, we should have a fee journal that we use to record our fees. So those are our books of primary entry. And then from there, we then post to the ledgers, various ledger accounts. So say, for instance, it's our cash book. Our cash book will be able to give us the various ledgers for our clients. It will give us the various ledgers for our expenses, and it will give us the ledger accounts for our assets as well as our liabilities. And then if we look at our prime book, like our fee ledger, our fee journal. So if from our fee journal, we'll be able to post transactions into our clients' ledgers. We are able to come up with our fees. And also, if we are VAT registered, we are able to come up with the VAT reconciliations from there. Okay, and then from the ledgers, then we then deal with our trial balance. Just pardon me, I just want to check. I think I've got someone who is saying something on the chat before I can. Okay, the questions that are there, it's assignment and test. Are they two different things? We download the assignment and then submit when we are done before due date, and the test different. Yes, they are different. They are very different. Test one is different. You will see, like, it's web-based. It's a multiple choice, so you do it differently. And can you do the assignment over a week, for example? Or is it when you open, you have to complete? No, the assignment, you are given like the opening date and the closing date. So you just need to adhere to those days. So you can do it over that period that you are given. And even we've opened the assignment such that if you make a mistake or you feel like you need to amend, you have made a mistake somewhere, you can go back to the assignment and then you remove it, or you can add in the one that you feel this is the correct version of your assignment. Okay, so I can come off the chat and then we share. I hope you can still see. If you can't see, then you should just let me know. And then, so we're discussing our accounting cycle. From our ledgers, we get to our trial balances, and then we do any adjustments that we might have. If we pick up errors, we do adjustments, and then from there, we prepare our financial statements. Okay, so yes, the next thing that we need to work on is our cash book. Assignment one is based on what cash books. We have removed ledgers, but what I'm going to do is that I'll also try to show you how to post into the ledger accounts, so that on our next webinar, we won't do much on ledgers. You'll be able to post into the ledgers. Okay, so Cash books, basically, they mirror our bank statements, our bank accounts, which means that for each bank account that the firm is having. So say, for instance, we've got 2 trust accounts, then it would mean that the practice or the firm has to have those 2 cash books, because we cannot record everything in one cash book. So we split. If you've got an account at FNB, one at Nedbank, one at Standard Bank, so we'll create separate cash books. So if you have an accounting system, then it means you will have to create separate cash books. And then what the systems do, they then integrate into the ledgers. So say, for instance, if we've got a client who has paid into the Standard Bank account, trust account, and then another one, and then he then also pays into the Nedbank account, then in terms of cash books, we would record those transactions separately. But then what we then do from cash books, then we have to get into our ledgers. So transactions for that particular client would be recorded in the client's ledger. So that is where we integrate. That is where we link everything, because we have to account for each and every client of ours. And when it comes to our trust cash books, we can only record what is in the cash book. What we have received in the bank account, that's what we record. But where, for instance, a client tells us that they've deposited money, yes, you can record to say client has deposited. And then the thing is that if that money does not reflect, then you do what we call a bank reconciliation. And then with that bank reconciliation, you are able to tell, to say this money we've never received, because your bank account will tell you that this was never received. Okay, so when it comes to our cash books, we also separate between trust and business. Our transactions should be separated. I know there are certain systems that you can record into like one system, but when it comes to systems like your Sage, your Pastel, your Xero, I think you will need to create a new company and then you record them separately. Okay, and then that's your cash book. So cash books, they more of like just mirror your bank accounts. It's only that the only difference is that we post vice versa with the bank, because remember, to the bank, we are their client, we are their creditor. But to us, when we look at our cash book, it is our asset. Okay, so the way that a cash book is structured, I'll more of like share. I'm going to come out of this sharing, and then I'm going to get into a template of a cash book. So I'm going to unshare and then move to a template. Hmm? Okay. And then now I'm going to share our cash book template. Okay. I hope you can see this template that we have. It's more of like a summarized one. I didn't put everything, but this is more of like a cash book template. So with a cash book template, what we basically have, we've got what we call a receipt side. So with the receipt side, everything that is received into our bank account, money that is received, be it EFT, be it cash deposit, we record it on the receipt side, which is basically, we call it the debit side. So when we apply debits and credits, this side is our debit side. And then when it comes to any payments that comes out of our bank account, we record it on the credit side or on the payment side. So this is how our cash book is structured. And this format, we call it a T. It's more of like called a T account. Why it is called a T account? It's because when you look at it, we demarcate between the receipts and the payments. So this bold line is there just to demarcate, to show you. So whenever you are posting your transactions in a cash book, you are supposed to make it in a T account, or you can use other formats that are there. But the thing that you should ensure is that you should have a column for receipts and payments, or for debit and credit, so that when we distinguish, we are able to tell what was happening with you posting into those transactions. Okay, so it is always wise, it is always advisable for you to put put columns on your cash books, so that you are able to record the date, the description. Sometimes we record the folio. Folio assists us with tracing the transactions. Remember, I said we've got the double entry system. So with the double entry system, every debit should have a credit somewhere. So if you record anything in the cash book, you are supposed to then record it somewhere else in another ledger account. In a ledger account, you're supposed to record it in a ledger account. It should be the opposite. So if it's a debit, then you will credit a certain ledger. If it's a credit, you will debit a certain ledger. Okay, so with our trust account is easy. The only thing that happens with our trust account, it should have a trust cash book. So I'm assuming that this is a firm with one account. It should have a trust cash book. And then the next thing that it should have are our trust ledger accounts. So those are the only things that we can have, because the money that is coming into our trust account is supposed to be money for our clients. So whatever that we receive, we are receiving on behalf of clients. Whatever that we are paying on behalf of clients. So which means even if we are taking our fees, we should identify the client. Hence, we need a transfer journal. We need to record from which client are you transferring this money from. You can't just transfer money haphazardly. You should distinguish, you should be able to tell each time you're transferring money, to say this money, I transferred it. And even on your payment description, it is best then to show that this is fees for client ABC, or this is fees for file M22, so that when you reconcile, then it is going to be easy for you to know how to post your transactions. Okay, so this is our template of the cash book. And then from our template, we want to work on an example. There is an example that we have in our PowerPoint. I think I have saved it in Word. So what I'm going to do is that I'm going to unshare again, so that I can be able to read the example and merge them together side by side. While we are reading our example, then we complete our cash book. Okay. I'm now sharing where we can see both. Screen. Okay, I hope you can see my screen. I hope it's big enough for you to see. Okay, so this is our more like our discussion, our question for discussion. So we want to post these transactions into our cash book. We want to post, but what I'll try to do is that I'll try to be fast. Hopefully I won't be too fast for me to show you how to go further and record these transactions in a ledger. Okay. Okay, so our first transaction, I hope you can see it. Let me try to zoom. So it says on 1 August 2021, our opening balance for our trust. This is the trust. So you need to read everything. This is the trust. So we've got an opening balance of 5,000, which is on the debit side. So remember, I told you that we've got a debit side and a credit side. Okay, so usually then the opening balance should be matched up. We should explain further and say the opening balance, it's made up of what? Money for client 1, 2, 3, 4, 5. Okay, so in this case, in this example, it doesn't show, but when we are doing our examples, then we would show you so that we want to, when you post to your ledgers, you are able to also post opening balances for our creditors. Okay, so what we do is that we record the date. Okay, let me copy the template. I'm going to call it Trust Cash Book. So this is our Trust Cash Book. I'm copying the template and pasting it there. And this is our webinar 1 solution. Okay, so our start date, it's 1 August 2021. I hope you will be able to draw, to also draw these T accounts. If you are not, then you will just let me know. I'll post a template for you so that you can utilize. Okay, we start with our opening balance. So it's a debit. So we'll show that it's our opening balance. And how much is it? 5,000. If you can't see, please let me know so that I can adjust, so that you get to see better. Okay, so this is our opening balance. So we have recorded it in our cash book. Okay, and then our second transaction, we are told on 2 August 2021, Mr. Govender deposited 50,000 into the account for a litigation matter. So we've got Mr. Govender is depositing money. So it's on 2 August. So we said money that we receive is posted on the receipt side. Okay, then our client is Govender. So usually you would find it's best for you to then have file references so that if you've got several Govenders, then you'll be able to also include a file reference that you can then trace to the files, or you are able to distinguish your matters. So in this case, we don't have, we are just giving an example, but it's always wise to do that. So it's for a litigation matter. Maybe we can just show that it's litigation, so that if he deposits for another matter, then we can distinguish by matters. Okay, so in this case, its amount is 50,000. So this is how we record our cash book. This is how we are recording. And then we are told that on 4 August 2021, SAPS paid 40,000 into our trust account on behalf of Mr. Maluleke. Okay, so it's money being paid into our account. It's a receipt on 4 August 2021. So our client is Mr. Maluleke. We can show that it's also from SAPS just for tracking purposes, but if you have a file reference, it becomes easy. And how much is it? It's 40,000. And then on 8 August 2021, we paid an advocate Bantonte 10,000 on the Govender matter. Okay, now we are paying. So we will go on the payment sides. We record our date, 8 August 2021. I saw a question on the forum. I also sometimes go through the forum so that I can be able to answer you during the webinars. So I saw a question which said, are we supposed to pay the advocate out of the trust account, like what our manual is saying? Yes, if money is received in the trust account, then we are supposed to pay disbursements out of the trust account. Like you need to check the act and part of the rules. That's what they say. If money is received in trust, then pay out of trust. And also the advantage of you paying out of the trust account is that it saves you in terms of registering for VAT, and because these amounts for advocates, they inflate. It will appear as if you are receiving fees, while it's not fees. So to SARS, you will have to explain, to say, no, this was not my money, but it was money for a client, you see. So it's always wise to pay these huge amounts that belong to clients. You know, remember we say we pay to and on behalf of a client from trust. So an advocate, we are paying on behalf of the client. Okay, so our description, then we show that it's advocate and we link it to our matter. 10,000 like that. Okay. So this is how we record in our cash books. And then 12 August 2021, we paid Mr. Maluleke 30,000 as a final settlement for his matter. So we come 12 August. So this is how we record in our cash book. But the way that I'm recording, I'm just recording in the cash book. But remember, these transactions are supposed to have a double entry. So what I would do is that we'll go through again each transaction so that we then post it and do the double entry. Hopefully we'll have time. Remember, we've got 1 hour, and then we can extend if ever you feel like we can extend. Okay. So this is for Maluleke matter. And then it's settlement. It's the final for his matter, and we're paying 30,000. So this is basically how we record in our cash book. A receipt side, payment side. So even in your assignment, this is what you're supposed to also do. Okay. And then we are told we transfer our fees of 15,000 from the Govender matter. Okay, so in this case, we are just illustrating how to record in a trust cash book. But you would find a transfer is made up of more of like 4 legs of debits and credits. We have to post in our cash books, and also we have to initially originate from our business account. Why? Because we have to raise our fees first. When we raise our fee, we recognize that this is our fee, this is our data, and then we do the trust transfers. When we do the trust transfers, we also show on our trust cash books that we are moving money from the matter of this client into our business account. So usually there's a journal that is prepared, which has got four legs to it to show how the money moves. But to record in our cash book, it's kind of like easy because we are just paying out of our cash book. And we are transferring 15,000 from the Govender matter. So we show that it's our fee, 15,000. So for our cash book, we're just showing how money is moving. And then 25 August, we paid the sheriff, Pretoria, 250 on the Maluleke matter. So even if we have agreed to say we are settling, we still have bills to pay for the matter. So because we are paying, it means like in this case where it's put in the trust account, it means on the business side, we had not recorded the invoice and the sheriff is not sitting as our liability on the business side. But if the sheriff is sitting as our liability on the business side, or we've already paid the sheriff on behalf of a client, say if it was a contingent matter, and then we are footing all the expenses, then in such a case, then this 250 would transfer it into our business account as a disbursement recovery. You see, we recover the money because we've already paid. But in this case, we have not yet paid. And in this case, it shows that we have not recorded it in our business side. Then we'll just pay it out of trust because the money is in trust. Okay. And then 25 August, next transaction, we transferred our fees of 9,750 from the Maluleke matter. Okay. Same date. So it's the same matter, but now we are more of like just taking our fees. Okay. And you know, you need to compute these things. You look at how much did you get. So the good thing about having a ledger, immediately posting to a ledger, is that the ledger will tell you immediately to say how much are your fees before you can take them. Okay. And then 31 August 2021, we receive interest in the amount of 520. So like what we discussed last week, I said that the trust account is structured. The Fidelity Fund is gone into a space where they've gone to the banks and then they've discussed with the banks and they've agreed on the balances that are running on the trust accounts. They've agreed on interest rates that the trust account is to earn. So the trust account is to earn some money in terms of interest. So if you see where we have written that there is interest which was received, please don't confuse it with what interest in the investment account. This is interest for the trust balances because the trust account earns interest and that interest net of which is payable to the fund. If you can check in the manual, it's there. And also last week we discussed about it. So please do not mix this particular interest with any other interest. If we say in a section 86.4, there was interest which was earned, then that is for the section 86.4. If we say this is the trust account, interest was earned in the trust account, it's for the trust account. Okay, so do not mix. Most students, they then mix, they get confused and mix it up. Okay, so this is the interest, and this interest does not belong to the to the firm or to the practice or no. This interest is payable, net of bank charges is payable to the fund. So do not create an interest account in the business account, like on the business side. And also the bank charges, when you compare the interest and the bank charges, and you see that the bank charges are lower than the interest, then what you do, these are trust transactions, you net them off, and then the difference is payable to the fund. So what we do is that we create a ledger for the fund, and then we transfer the money to the fund. Okay, so in this case, we are told that we paid bank charges in the amount of 324. 31 August 2021. So they are bank like the trust account, for operating a trust account through a bank, using their systems, using their resources, they also want money. So you find they withhold some bank charge depending on their formulas of charging, of which I know they publish them, and then the other nitty-gritties they kind of like calculate behind the scene. So we've got no control over that. So in this way, this is how we record our transactions. This side, these are the receipts. This side, these are the payments. Okay, I will remove. So for us, if we say balance of the cash book, so what you then do is that you look at your totals. You have to put your totals at the bottom. You are done with the month, and then you have to see which side is bigger than the other. So let's compute which side is bigger. We've got our debit side has got a bigger amount. Our payments are less. And then the difference is 30,196. So to balance off, when we say balance off, you are making the both sides equal, you see? So making both sides equal, that difference is what you take to the next period. That is going to be your opening balance. So this one, we call it a balance carried forward. So we are going to carry it forward in the next month of September, and then we use it, and then we are supposed to even know what is it made up of. So this is trust accounting. Okay. So this is how you record your cash book. Even if we are to give you a business cash book, the concept is still the same. Receipts on the receipt side, payments on the payment side, or receipts on the debit side, payments on the credit side, and then you balance off. You balance off between the two. So this is what I expect you guys to do in assignment 1. Okay. And then let's record the business transactions. I'm not going to post into ledgers now. Trust cash book, and then let's do our business cash book. So I'm going to add in a sheet. So this is going to be our business cash book. So I'm just going to copy so that we don't waste our time. I hope you can see, you can follow, and this is doable for you. Okay. So I'm going to enlarge. You need to have a bit of some Excel skills, or even you can do it on a piece of paper. So now this is our business cash book. You can write it down, or you can do it in Word, whichever way that suits you, as long as you can answer the question. And then on the system, you just upload it in PDF so that we are able to mark. Okay. So this is still our template. And then for the sake of time, I'm just going to be a little bit faster. 1 August, this is our business. We've got an opening balance of 3,750. So the reason why we put debit, you know, our bank accounts can go on an overdraft. It can go on an overdraft, or it can be overpaid. Like you go to the bank, you find it's overpaid. So in such a case, then it will have a credit balance. So when you are recording, you start with a credit balance, yes? Hello? Okay, let's proceed. Our second transaction on 2 August, we are paying Telkom. And how much are we paying? 750. So it's a matter of just posting payments on the payment side, receipts on the receipt side. 4 August, we buy stationery. How much we spend? 300. Okay. And then 25 August. So our bank account is not so busy. 25 August, we pay a salary for the secretary. So for our salaries, when it comes to our cash book, do not lump them up. Do not lump your salaries. We remember when we are processing payments, there's no way that I can pay a salary for Peter, John, and Messi. I pay them all together. Isn't it, I'll have to do EFTs to each one of them. So if we do not lump up things, it's easier for us to follow. Like if you want to check, then we are able to check our records, and then we can see, oh, okay, yes, our cash book says we paid the secretary on this particular day. So if you lump it up, then it would give you the exercise of you going back to the bank statement and then you check. So I encourage you not to lump up things. Okay. 25 August, we also the director or the practitioner withdrew some money. So we call it drawings. Or if it's a salary, it's a director's remuneration. Or if it's a company, then it will be director's loan if it's not a salary. So they are more of like taking a loan. But in a sole prop business, we put it in a drawings account. A sole prop is allowed to draw. And then because they are taxed on their profits, so the drawings account is just recording what they've taken. If they take more and there's still tax to be paid, they will have to bring in money back and pay tax. Okay, 25 August again, we pay MST investment for our rent. Okay, how much? 2,400. And 25 August, we purchase. Hello, may you mute so that we do not have background noises. Computer equipment for our computer. We purchased a monitor from Incredible Solutions. And then how much do we spend? 799.99. Okay. And then the bank withhold bank charges. So basically what we are doing is we are paying out, we are paying out. Okay. So if we look at our business account, it's more of like payments, but usually these transactions are for one firm. Record the following transactions in the cash books. So usually they are for one firm. So if you go back to your trust, you should more of like trace where we took fees. You have to trace where we took fees, and then you also come into your business and receive those fees. So like in this case, on the 25th, we transferred our fees. Here we are. We transferred our fees in the Governor matter. So this is what also you have to do to make sure that when we are transferring our fees, we also receive our fees in the business account. $15,000. Okay. And then we also received fees from the Maluleke matter on 25 August. So so it was fees of 9,750. Okay, so we can show this is our fee that we are receiving. So if it's disbursements, we also show that these are disbursements. So this is how we record in our cash book. So if we get a question, assignment 1, and then from there, I think then we are supposed to reconcile. So when it comes to our balancing off, like what I've said, you look at the bigger side minus the smaller side.
Can I ask you to please just go back to the trust cash book for me quickly? I just want to see the comparison of the debit and the credit side there.
Oh, okay. Okay, so you want to...
Okay, just move your space bar a little bit more to the credit side. Okay, so
Yes.
it's on the payment side there, and then it's going in onto the receipt side on the other side. Okay, that's what I wanted to see. Thank you.
Oh, okay, yes. Because here we are paying, out of our trust account we are paying, and then the business account it's receiving. So it comes to our receipts. Thank you so much. So yes, this is how we post into our cash books. I hope, I don't know if probably we should take a poll if you want me to show you how to then post in our ledgers the same transactions from our cash books into our ledgers, or we call it a day and then we'll do it in our next webinar. Okay, I'm going to stop sharing because we are done with this exercise. Okay, so yeah, let's discuss any questions that you might have. Should we continue? Can we raise hands? We can do the ledgers so that when we do assignment 2 is a bit long. So if we can cover the ledgers now in assignment 2, it will be easy for you to recap. Okay. So far, I think I've got 3 people who are saying we should continue. About 4 people. Any questions that you might be having, you can say before I can continue. 6. 7. So it appears most people want us to continue with our ledgers. So what I'll try to do, I'll try to be fast, but at the same time, I don't want to rush you guys, so that when you are attending these webinars, they should be beneficial at the end of the day. So I'll continue. I will share my screen so that probably in 30 minutes, 45 minutes, we are done. And then we can go. Okay, so I'm back to our screen. We'll go back to our trust cash book. We'll go back to our trust cash book. So remember what I've said, for every transaction that we have should have a corresponding entry. If it's a debit, then it should have a credit. Okay, so unfortunately for opening balance for our trust account, I'm going to, even the business, I'm going to leave these ones out because we're not given enough detail. So in our assignments, would give you enough detail to say, okay, the opening balance is made up of 1, 2, 3, 4, and it's split 1,000, 1,002 or something, or it's one client, it's for one client, so that you are able to also create an opening balance for that client. So we'll start with our first transaction, which is, so what I'm going to do is that I'm going to just hide the investment account, and then we start with our ledgers. So these are our ledgers, our creditors ledgers, and then we name them accordingly. Okay, so our first transaction, we've got a Mr. Govender depositing 50,000. So him depositing, it means the account is receiving. It's on the debit side. So when we come to Mr. Govender's ledger, so now we are creating ledgers. Govender. Okay, so already on our template, we've got always the debit side will always remain on the debit side. The credit will also always remain. So what I'm going to do is that I'll highlight with the same colors, yellow, yeah, and then green for the credit side. So it doesn't even change. What just changes is that for every entry, now you go back to your transaction and say, already I've posted a credit. So on Mr. Govender's ledger, then it means it's going to, he is our creditor, he is our trust creditor. We are receiving his money. He's called our trust client or our trust creditor. So we received in our bank account. So it's a deposit, how much? 50,000. Or maybe, yeah. So in this case, maybe we call it Mr. Govender litigation, or if you've got a file reference, you put a file reference. How much? 50,000. So it's coming from the link, it's linked to our bank account. So hence, if you can come here, we're indicating that it's Mr. Govender. So you correspond them with the account name. So this is our trust cash book. It is our bank account. And then when we come this side, this is Mr. Govender, and we post on the opposite side. He's our creditor. We haven't done much for him until we are told of the next instructions. We've got 50,000 in the trust account for him. So this is the interpretation. Okay, on 4 August 2021, SAPS pays 40,000 for Mr. Maluleke. So our client, now our client is Maluleke. So I'm going to delete these transactions that are there so that we have a ledger account, Maluleke. So this was a matter, probably it was detention or something. So we are told that we received 40,000. So we have already, like we have received it here. This is where we received it. So now we are doing the what? Posting of the double entry. It's 4 August. So you should remember to always record, have your descriptions, have your date. Because if you want to trace these transactions, you can only trace by looking at the date, look at the description, then you trace them. So it's like that. So how much is it? 40. Okay. And then 8 August, we pay advocate, and we are paying him for which matter? It's the Govender matter. So on our cash book, we've recorded it. You see here it is. we've paid, it's the governor matter. So you also go onto the ledger, opposite of what you have done in the cash book. Now it's a credit to the it's a debit to the ledger. Why it's a debit to the ledger is that we are indicating that we have paid. We are reducing what we owe our client. We are reducing what we owe our creditor. So that's why we are saying it's accounting. We are accounting for each transaction so that at the end of the day, we can tell whose money is it in the trust account, okay? So in this case, the debit, it's because we are reducing. Remember, this is our creditor. So we are no longer holding 50,000. We are holding less. Why? Because we've paid the advocate on his behalf, okay? And please note, you should not record an account for Advocate Van Tonde. He is not our client. Our client is Mr. Govender. So we are showing transactions on behalf of our client. Full stop. Okay. And then 12th August, we paid Mr. Maluleke 30,000 as a final settlement. So we go to his ledger. In the cash book, we've already shown we've paid in his ledger. It's 12th August 2021. And then it's originating from the bank account. And it's settlement. Okay, how much are we settling? 30. So at the end of the day, you look at it, we received 40, we have paid 30. And then on 25 August, we transfer our fees, 15,000 Governor Matter. We go back, Governor Ledger, 25 August 2021. And then through our bank. So it's our fee. And then how much? 15. Just like that. And we paid the sheriff 250 for the Maluleke matter. So you go to the specific matter and you process. And now we are paying the sheriff. Okay, how much? 250. And then we transferred our fees of 970. Okay, in the Maluleke matter. So come. So we go to the specific client matter. That's where we then record the double entry. Okay, I'm just gonna enlarge our ledger account. Okay, 9750. Okay, and then the next transaction. We received interest in the amount of 520. So like what I've said about interest goes to the fund. So it is our legal practice Fidelity Fund. Okay, so if we have received interest, we have more of like received it. If you look at our cash book, it's on our debit side. Here it is. So it means whenever the trust account receives interest, it's more of like making the fund our creditor. See? It's interest. So the fund becomes our creditor and 520. Because the fund is allowed the law firms to deduct bank charges, then also the bank charges, if we go back to our cash book, Here are our bank charges. They are on the payment side, on the credit side. It means when it comes to the ledger of the fund, because it's reducing, we also reduce what we owe the fund. Like that. So how much is it? 324. 324. Okay. So we are done. We are done with our ledgers. I'm going to delete, I think, anything else that follows. I'm just going to delete. Okay. We are done with our ledger. So with the cash book, we have already balanced it off. We've already balanced it off. And when it comes to the governor matter, we also need to balance it. So how we balance it, we first of all add the debits, and then we also add the credits. So in this case, if you can have a look at it, our credits, our credit balance is higher than our debit balance. So when we balance off, we balance where there is a lower amount. So we calculate how much. So it's higher by 25,000. So when we are balancing off, we go 31 August. This is the amount that we're going to carry forward. Balance carried forward. And how much? 25,000. So the idea is that both sides should be equal. And then where it's lower, then it shows us that we are going to carry this one forward. And when we are carrying it forward, it is still, it will go to our credit side. Remember, these are our creditors. So our creditors will start with an opening balance of 25,000. Mr. Govender will start with an opening balance of 25 on the credit side in the month of September 2021. Okay, and then when it comes to Maluleke Meta, we also add it up. We get 40, and then on the credit side, I'm just going to delete this. On the credit side, we also add it up. That we get 40. So it means if you look at this matter, there's nothing to balance off. So it means it was finalized. We don't have money in the trust account for this matter, nothing. So we do not do any balances. It is balancing already. Okay, and then we go to the legal practice fund, the interest. When we look at it, the credit side is higher, is bigger than the debit side. So we subtract, that is our balance. So we've got 196 payable to the fund in terms of net interest. So 31 August 2021, this is our balance carried forward. So this is carried in our books. It's carried forward until we are told or until we say we have to pay. Now that we have to pay on a monthly basis. So say on the 1st of September, we decide to pay. We'll start with 196, then we pay 196, we get to 0. Okay, this is how we balance off. I don't know if there are any questions. Let me just check on the chat if I can do the business account. Okay, will this example be available after the webinar? Yes, I'll post the template and the example so that you can go through. I hope you will have time to go through. And sorry, Melody, I only see it now where you say you can only see half the Word document. Yeah, what I've tried to do is that I've tried to minimize the Word document. Sorry for that. I will try to scroll through. because I want to enlarge the Excel one so that we get to see this is where our workings are. So I'll try to scroll through so that you can see. If I make it full, then we won't have them side by side. We won't have them. We'll have to browse between the two. So hopefully you have not missed a lot. Okay, so on our business cash book, we also go there. We do the same, the double entry. We'll do the double entry. So we've got our opening balance. So also in this case, I don't have a narration to say what is making up our opening balance. It could be that it's money belonging to the practitioner. It could be that it's our retained income, our retained profit that we brought from previous years. So I'm going to leave that one out, but in our assignments we would explain that to you. And then I am going to create our ledgers. Okay, so the first one would be for Telkom, I think. Let's go down. So we paid Telkom 750. Okay, so this is not so detailed in terms of do we recognize Telkom as our creditor, or whenever we pay, then we treat it as an expense. But in this case, I'm just going to assume that we received an invoice, we have paid. So immediately, instead of us creating too much work for ourselves, we are going to recognize it in our telephone account. Okay. So that we can finish on time, we do not create a lot of ledgers. Okay, I'm going to copy one ledger from our trust cash book just so that I don't waste time. So our ledgers, the format is the same as long as we are doing T accounts. These are T accounts, these are called T accounts, they're the same. The way that we create them, they are the same. Okay, so hence we just copy templates so that it becomes easy for us to move on. Okay, so usually our expenses, our assets, they are recorded in what we call a general ledger. So we call it a general ledger. It's just, and then besides the general ledger, on the business side, we've got a debtors ledger, business debtors ledger. So the business debtors ledger is the one that records our clients, or in legal terms, in legal terminology, they call it a matters ledger, business matters ledger. So it records all the transactions that have to do with our matters. And then also we've got our creditors ledgers, like business creditors, like Telkom can be a creditor. If we've got an account with them, we can have the municipality, we can have even anyone that allows us to open an account with them. We call them creditors. So we also have a creditors ledger. So we've got a general, and then we've got a debtors ledger, we've got a creditors ledger. Okay, so our expenses are posted in a general ledger. Like in this case, so we said we paid Telkom. I am just going to assume that we had not created it as a creditor. So if you can check in our cash book, we've paid, it's on the credit side, on the payment side. So the concept is that you should just grasp payment on the payment on the right side. On the left side, it's our receipt on the left, payments on the on the right side. Then if you can grasp that concept, then you are good to go. If you make them opposite, then I'm going to mark you wrong because you would have done vice versa, and it defeats the accounting concept. Okay, so we record our date 2 August 2021, and then it's from our bank account, and it's Telkom. We could have, say, Vodacom, MTN, all those are telephone expenses. Okay, so this is how we record it. And then we buy stationery. That is our second transaction. Hope you can see it now. Let me try to enlarge a bit because this is a bit shorter. We buy stationery. Then we also create a stationery expense account. So normally we normally call it printing and stationery. So anything that has to do with printing and stationery, we then just post it into this ledger account. So we are told that we bought stationery at CAN for 300 Rand. So on the cash book, if you go, it's a payment. We are buying, we are paying. It goes out of our account. It reduces our bank account. So on our expense account, it then becomes a debit, a transaction that we debit. Okay, so we bought on 4 August 2021. And then it's from our bank. And we know it's stationery and it's 300 like that. And then we pay salaries. So in this case, you can see when it comes to our salaries, we are not told anything about pay as you earn UIF. So we assume they are not registered for pay as you earn or UIF. So in our assignments, what we do, then we would tell you to say the firm is registered for pay as you earn. You have to deduct pay as you earn of so much. You have to deduct UIF of so much. So it means when you are paying, you have to take that, especially the paying part, you have to take that into account. Because if you pay the employee the full amount, then it would mean the firm is still liable. According to the Act, the firm is supposed to deduct and pay over. So if it doesn't pay, the practice, if it doesn't pay, then at the end of the day, SARS will come and demand from the practice and the practice will have to pay. And usually, with employees, it's difficult for you to go back and say, in 2021, I paid you a full amount. It's very difficult. So it will be a mission for you to recover the money. So you just need to do the right thing from the onset. Okay, so we call it salaries and wages. Okay, so in this case, we paid 6,000 to the secretary. So like in this case, like what I'm saying, there's no instruction to deduct. So it would mean they are not registered, they paid in full. So 25 August 2021. So it's from our bank. So usually with our salaries, we are supposed to do like normally we are supposed to do our payroll. So with our payroll, when you do your payroll, then we post the payroll is our book of prime entry. It's our book of prime entry. So when we come to our bank account, we are paying the net according to the payroll, which is our book of prime entry. And when it comes to our ledger, we are posting from a journal that comes from the book of prime entry. And to our salaries account, we post the gross amount. We post the gross. We do not post the net. We post the gross amount. So in this case, we know 6,000 is our gross amount. Hence, we are posting it. So it's not coming from our bank account. It's coming from our payroll journal. So it's our payroll journal, and it's the secretary, and always know that it's a gross, we post gross amounts. If we do not have any deductions, then it would automatically match with the bank. But where we've got other deductions, then you would find those deductions, we then post them to the liability accounts, from the payroll to the liability accounts, because now we are now having a liability. We are owing SARS, we are owing UIF, the Department of Labor for UIF, and we are owing SDL if we are registered for SDL. Then we post it to the liability account. So our source document is the payroll. You should always do your payroll, your pay slips, your payroll listing. Should more of like have a payroll system in place so that you use it to post to your ledgers. Okay. And then 25 August, the sole practitioner withdraws 5,000 for themselves. So this one, what we call it, so it's part of our equity. We call it equity. It reduces capital injected and profits of the company. So when we create a ledger, it's more of like part of our equity, and that ledger, we call it drawings. So it applies only to sole practitioners. Companies, it's different. It becomes a loan. Otherwise, a director has to take a salary. I've explained it before. So on our drawings, we also show 25 August from our bank account. How much? 5,000. So it's a drawing. So it's clear, the explanation is clear. And then we pay rent to MST Investments. So most probably we are paying, this is for 25 August, we are paying rent. So our rent, we are paying it more of like in advance. This is now rent for September. So it's part of our general ledger, which means we have to make it part of our general, this is our general ledger. And then we've got our rent. So it can be that if we've got an account with MST, we can, if they allow us to pay them partly, but if they just say we want our money before the 1st, then it means we have to just post it directly to the rent account. But if they allow us sometimes to pay on the 7th, or pay or do not pay, or be lenient to us, then we can create them as a creditor, where then we show the rent account as well as the creditor's account. Where we have not paid, we receive an invoice, we record the expense, we record the creditor. The moment that we pay affects the bank and the creditor. So in this case, I'm seeing they are prepaying. They are paying 5 days in advance, so for the next month. So I don't think there's need for us to create a creditor. Okay, so it's still 25 August. It's our rent. Yeah, how much? 2,400. So we record it like that. So I am assuming 2,400 we are paying, that is what we are charged every month. But where we are paying different amounts, they do not tie up, then we have to create creditors. And then we reconcile to say what is the invoice, the actual rental amount, how much have we paid. So that can only be done by using a creditor's account. Okay, and then also on the 25th, we purchased a computer monitor from Incredible for 799.99. So a computer monitor, I would assume it's an asset. It's an asset of the company. So assets are usually recorded in a asset register. So a firm needs to have an asset register. A practice needs to have an asset register. Whenever you buy, you acquire assets, and then you record all your assets. And also, there should always be a ledger where you record your assets. When you sell them, you also show that you have sold. Okay. So we are buying from Incredible Solutions. How much are we spending? 799.99. And also the other thing, it's if the firm decides or the practice decides to say we can only capitalize, we only capitalize assets which are more than 5,000 or which are more than 7,000. SARS say anything more than 7,000, then you would find there's no need for you to put it under assets. Then you can expense it. So there's an account that we normally call assets less than 7,000. It's then that account is an expense account, then you expense, and then that's it. Okay, so this is our asset. These are so usually assets, you also need to show them, have a kind of like a ledger where you record the assets together. There would be the four under assets. It can be equipment, it can be motor vehicles, it can be furniture, then you record them together. And then the last transaction is our bank charges in the amount of 180. So this is a bank charge to our business account. So it is an expense of the business. We do not mix it up with the trust account. We only mix up when our interest is not high. If our interest is not enough, then the fund doesn't want to fund anyone. What they do is that they say, you have to pay. You have to do a transfer into your trust account to cover those bank charges. So when you do those transfers, you are allowed to then recognize it as an expense, as a business expense upon transfer. Okay, so it's 31 August 2021. It's here. It's our bank account, paying MST Investments. Okay, and then this one, it's our bank charges. So it's our bank account. How much? 108. So this is how we post our into our ledgers. So it's the easiest way is for you when you post in your cash book. And then after posting your cash book, you also come and post in your ledger. You create your ledger. If it is already there, then you add in a transaction. You do not have to create a ledger for each and every transaction, but transactions of similar nature, they are posted in one ledger. Like if you've got like our bank charges, you can have a monthly fee, you can have a service fee, you can have a value-added services. All those, you can just come and create a bank charges ledger, and then you post the three transactions together, like separately, but in one ledger. The moment you start posting each transaction against, you create every transactions against a ledger, then it's more of like you are doing journal entries, which we are not supposed to do, because the idea of us having ledger accounts is to group transactions of similar nature, such that when we come from March up to August, we should be able to say how much did we pay for bank charges. So when we add up, we're able to tell this is how much we paid. Okay, thank you so much. I don't know if anyone has got a question before I can unshare. Any questions before I can unshare? I think we are good to go. This is how we post. So what I'm going to do, I'll log in and then I'm going to go on the announcements and then I'll send you the question as well as the cashbook template, as well as the trust cashbook template, as well as the business cashbook template. But in our assignment, we are only limiting it to the cash books. So if you go a further mile and prepare ledgers, you're not going to get marks, but it is good for your practice. Okay. So thank you. Thank you very much for your time. I am unsharing. Okay. And then the question that I have, it's, can you clarify the difference again between drawings and salaries for owner or director? Okay. So drawings, they apply to someone who does not have a company. So if your practice, you decide to make it an incorporated, you go and register with the CIPC, the company registrar, you go and register, then it becomes an Inc, incorporated. So in an Inc, the only way that you can have money is that you should have a salary or you should have dividends. So it's salary or dividend. So you cannot just draw money willy-nilly from the account. So when you get a salary, then it means it's subject to pay as you earn, just like the employee. So you become an employee of the company. You get your salary, you specify my salary is 25,000 as part of the payroll. Then they also deduct pay as you earn and UIF for you, which is paid over to SARS each time you earn, each time you're earning. Okay, so for a drawing, this applies to the practitioners who do not have companies or in a partnership. So these ones, they can draw from the firm or from the practice, whatever amounts that they want. So the drawings, you find, they do not affect that much. They would not affect your tax standing, because your tax standing, it's text in your hands. The taxman looks at the income less your expenses. So income less your expenses. So your drawings are not expenses. You are taking your share of the profits in advance. So it's income less expenses, then tax is calculated. But for a company, your salary then forms part of the expenses. So it will be income less expenses, including your salary, because you have already paid tax in that salary. So that is the difference. I hope you do understand. Okay, and then I've got another question. I've always thought that you cannot pay an advocate directly from a trust account and you have to pay from the business account. Yes, most of us, yeah, we also had that mentality that you can only pay from the business account. But if you go through the act and the rules, they say any disbursements that you have, and you have not paid through your business account, then whenever you receive trust money, usually, with the law firms or the advocates, you can receive your money in advance. So you can only receive it in the trust account. So that money still, it's not your money. You can always receive trust money in advance to cover the fees liability, to cover any other liabilities. So if you get it in advance and it's a deposit for a matter, any expenses, advocate, sheriff, it can be anyone on behalf that you have to pay on behalf of the matter, then you have to pay it out of trust. So that's what the rules say, the act says you have to pay. So that's why you can see even conveyancing. With conveyancing, they have to pay out of the trust account, even the duty that they are paying out of business, they are supposed to link their trust account and then pay it out of trust, and then it shows as a trust. So it also helps with you not recording a lot of revenue, and you have to explain that, no, I didn't have to charge VAT because of it's not my money, it's the advocate. Then you utilize the trust account. Okay. I hope you get it, JH. Any other questions, or we call it a day? Thank you so much for attending, and I wish you all the best in our assignment. If you've got any questions pertaining to the assignment, yes, you can ask, and then I will be able to answer. I am going to stop recording, and I think Grace will share the recording with you. Thank you.